Welcome to Inside Guelph. We are live doing another brand new market update for you. We're doing the end of June report. Really excited to have you here. So without any further ado, let's dive in. I'm going to show you our screen here and we're going to dive in. Boom, here we go. Hey, before I do, obviously we're the Zahnd team real estate advisors, the only company that guarantees you a 5-star real estate experience. We got an exciting news. We just launched our brand new website. Go check it out at zahnteam.ca. It's going to be linked in the bio. Here you can learn about our real estate journey, how we guarantee you a 5-star real estate experience. So here's where our 5-star real estate experience is. Another thing that you can do is click this Learn More button and you're going to be able to see how we help people that are buying and selling, people that are doing first-time buys, people just doing buys, people are just doing selling. So take a look at that. If you're interested in interviewing a real estate company that's ranked one of the top real estate companies in the city, definitely check out zahnteam.ca. All right. Without any further ado, I'm going to give you what you came here for, which is the end of June market report. I'm also going to do a little bit of a mid-year update as well. And if you really like geeking out like I do on the stats, you're going to stick with me all the way to the end, where we're going to do all the different data points of lead indicators, market stat updates. So I'm going to go pretty deep at the end there. I'm going to show you my spreadsheet as well. Without being said, let's dive in. All right, just like we start off every single market update, we're going to see what's on the market. So our 5-year average for June is 284 properties on the market. Last time, 2 check-ins ago, we were at 170. Last check-in, we were at 151. And now we are at 126. This is not the way we were wanting the trend to go. Unfortunately, it is. So in just a moment, I'm going to show you how that's happened and why that's happened. But let's take a look at the product mix that's currently on the market. Our 5-year typical average at this time of the year, we should have about 179 singles on the market, 16 semis, 51 towns, 54 condos. But instead, we got 74 singles, which is not even close to where we should be. 3 semis, 25 towns, 24 condos. So as you can see, the inventory is just taking a beating yet again. But hey, there's some really interesting things that are happening, such as our average sale price, some movements there, and then obviously our inventory inflows, outflows. So let's take a look here. What happened in the month of June? Well, we started the month with 140 units on the market. Our average inflow, so the amount of properties that flow into the market on a daily basis on average is 10.7. So that's about 322 properties for the month of June. What happened is we were at 11.5 properties flowing into the market every single day within the first 15 days of June. So that looks really good. We wanted to keep that listing trend up so we could add more inventory. Unfortunately, the velocity of properties coming into the market slowed down by almost 1 property a day, and we actually ended June with only 323 properties, which is less than we were hoping for. So I mean, as you can see, it's only a 0.44% increase over a 5-year average. So we've gotten back to our 5-year average in terms of inflow. On the outflow side, our 5-year average is 7.9 homes per day flowing out of the market. And as you can see, our last check-in was 8.5, and here we actually accelerated. So where we decelerated or lost velocity on the inflow side, we actually gained momentum on the sales side, which is definitely not going to help the inventory. So that's actually a 14.4%. As you can see, those discrepancies are massive when you have a 14% increase on the sales side and only 0.44% increase on the inflow side. It's going to have a dramatic effect on inventory. If there's no inventory, there's no options. If there's no options, only the best things are going because there's multiple bids on those best options, is driving up the prices of what is available on the marketplace, right? Because if you have more options for buyers, they get to spread out a little bit. It's not very concentrated, and therefore you're loosening up that issue that we have, which is not enough homes for sale for the people that are out looking to buy. Very interesting stat here. I mean, this was going up and up and up, and I'm going to flip over to the other screen. 89 homes failed to sell. So you could probably just see and imagine what's happening here, right? Even with the inventory coming in the market slowing down, the 89 properties that failed to sell is very likely a case of people trying to list their property, not getting what they want, take it off the market, put it back on the market. So this is probably somewhere else that this inflow is actually misrepresented by a couple of homes a day, maybe 1 home a day from properties coming off and back on, off and back on. So if that's happening, and if we're only actually getting 9 homes a day to the market, and we're consuming 9, that's probably why we're seeing this very tight and decrease in inventory. and why we're seeing maybe the inflow number be misrepresented by all the properties that are failing to sell. 3 a day failing to sell, that's crazy in a market like this. All right, and yeah, last month we were 2.6, so we've accelerated on our fail to sell rate. Yeah, I'm just gonna pop it over here. Why not? While we're in here, you can see here that the 5-year average. Let me just zoom in for you so you can actually see better. And you're here to hang out with me on the market update. So if you're here, you're probably in it for the long haul here. So in January, for example, we had about 7.5 homes per day coming to the marketplace, and then increased to 8.4. This is the 5-year average: 7.5, 8.4, 9.3, 10, 11, and now then in June and July you start decelerating again, right? So as you can see, the inventory inflow accelerates until about May, and then starts slowing down again in June, and then slowing down again in July. As you can see here on the actual numbers, our peak inflow was 13.8 homes per day, and then immediately started decelerating when it should have been accelerating. So I mean 12.4, 11.8, 10.8. So we're slowing down on bringing homes to the market. And then on the outflow side, just to show you, we're actually also starting to slow down a bit on the outflow side, but not nearly as much as we are slowing down on the inflow side. So again, we had peak outflow in March of 11.7 homes per day selling, and now we're sitting around 9. Interestingly enough, though, and we're going to get this in the later, I know I'm getting stats heavy here, but I think if you're watching this, you're probably enjoying it. Our last 20 days of outflow is actually down to 7.8. So, and our last 15 days are around 8.1. So it looks like in the last 15 days, 20 to 15 days, the sales are also starting to slow down. So everything's starting to slow down a bit, but what needs to happen if we're keeping with our 5-year averages now, it's not going to increase inventory because we actually need inventory to increase. So we need that inflow to start really popping up so we can make a dent in that. So I just want to show you that, just kind of show you where we're getting the information and show you the overall trend of things. Like it's still a seller's market, and it's likely only a seller's market because of the lack of inventory. When obviously sales are increasing and listings are not coming in as hot, it's going to put pressure on the existing inventory. All right, back to the presentation. Average sale price. So what did it do, right? So you'd think that the average sale price might be picking up, but the government actually introduced some cooling measures again, and as you can see, we dropped this time quite considerably, 7.5%, 7.05% from where we were on our highs. So we had a $782,000 average sale price last month in May, and now that's dropped all the way down to $727,000. I know this is a small sample size because we're looking month over month, but I'm going to be showing you the halfway mark year over year, and you'll see some deceleration in the average sale price too. Considering year over year though, obviously it's still way up, 19% up. So every single month we were being about 23 to 28% above where we were, and now we're slowing down to 19% above. So as you can see, things are slowing down. And why could they be slowing down? Well, some of the reasons is the government introduced increased qualifying rates with the loosening of COVID measures. People might be looking at getting away, taking some vacation, leaving. So not everyone's just focused on real estate anymore. It could be definitely a couple different factors. My hunch is definitely that it's mostly likely tied to the increase in the qualification rate, because just like in 2017 when the government introduced cooling measures like it did right now, which is almost actually at the exact same time, you're going to see some really interesting trends. I'm going to show you what it looks like from 2017 to now and how that could completely play out to be almost the exact same. So if you're a buyer, you might be in for a bit of a purchasing off the peak. And if you're a seller, prices are still great, but if you want to move, I would definitely consider it. If you're cashing out of the market and not rebuying, because usually when you buy and sell in the same market, you're not really affected by the swings of the average sale price. However, if you need to sell, you're likely starting to miss out on that absolute peak price. So I wouldn't wait any longer if you're looking at cashing out. I've been saying this the whole time, but now it's definitely playing out as I potentially predicted there, that the government was going to cool the market, and now we're kind of seeing that cooling already. Okay, so mid-year report, you can see that in the first half of 2020 we sold 1,070 properties. In the first half of 2021 we sold almost 1,600 properties. That's a 49% increase in units sold year over year. So as you can see, obviously that's putting a lot of pressure on the inventory, and then that's also putting a lot of pressure on the average sale price. The velocity is slowing down though, so that should bring down that average sale price and hopefully bring some more inventory to the marketplace. All right, how about average sale price? Well, last year, 50% of the way through last year, the average sale price increased to $585,000, and this year, the average sale price halfway through the year is $746, which is a 27% increase based on last year. So I want to show you something else here that's going to be pretty interesting to those that are stat heavy on wanting to know what's going on in the real estate market. So as you can see here, I drew some parallels to 2017 quite a bit, and this is what happened in 2017. I'm going to zoom in for you, so if you can see this, that'd be great. Here in 2017, which is right here, we had an average sale price in that first quarter of $506,000, and as you can see here, the year over year, so 2017 Q1 versus 2016 Q1, prices went up 32%. 32%, okay? And then in 2017 Q2, year over year, prices were up 26%, but quarter over quarter were 4.3. So as you can see, it started to slow down a little bit. In 2021, which is right here, average sale price year over year up 27% year over year. And here we go, we can see again, it's up 27%. So it's staying very stable, but what you need to see right here is that the quarter over quarter actually only went up 2.18%. And then when we wanted, the very interesting thing that happened, as you saw the average sale price dip was starting to happen there, Q3 2017 quarter over quarter saw a 10% decrease from the previous quarter. Okay, so in 2017, huge run up in Q1, another big run up in Q2, decrease in Q3. And then in Q4, what happened? It just quarter over quarter was 4%, year over year was 12%. So if you were caught in that swing there, and I can show you the map as well, if 2017 is a lot like 2021, which is kind of playing out to be that way, we could see an average sale price drop quarter over quarter from last quarter. And it's already started happening, so let me just get back to the presentation here so you can see what I'm talking about. Let me just actually let me get through this, and you're gonna see that the long chart. You're gonna see this comparison 2017, so it could be pretty interesting. All right, so let's take a look at the next 30 days and do a months of inventory analysis to show you if the market's cooling or heating up or staying the same. So today, right now, we have 127 units of real estate for sale in the marketplace. We have, on average, over the last 15 days, 9.5 properties coming to the market a day. So that should give us another 285 units to sell. On the outflow side, over the last 15 days, like I said, it's starting to slow down a little bit, which is great. Hopefully it maintains that slowing pace of not selling so much so we can get some more inventory. It should be around 7.8, which is about 232 properties going to be consumed by the marketplace. However, there's going to be about an estimated 60 homes fail to sell. So I'm not predicting 3 homes are going to fail to sell like they did last month. But I'm predicting about 2 homes a day are going to fail to sell. That's what we're hoping for. So the way I got this number about how many units there are consumed, 127 properties right now. If we add 285 properties minus the 60 that are going to fail to sell, that's going to leave available 352 properties for our marketplace to consume. Okay? If the marketplace actually does consume 232 properties, we will be left over with 120 properties for sale. Okay? So if we're left over with 120 properties for sale, and let me just backtrack, sorry about that. Let me just get it back here. So if we're left with 120 properties to sell, and on average we're selling 232, how many months of inventory do we have if no new listings came on the market? How quick will all that inventory be consumed? Well, if you take the 232 divided by the 120, we only have half a month of inventory for sale on the marketplace. Based on the last check-in we did, we had 1.6 months of inventory. We lost almost an entire month of inventory in the last 15 days since we did the last market update. So again, the sellers are in a very favorable position right now. The only reason I feel like they're in this favorable position is a lack of inventory. So if inventory does start coming to the market, We've already seen some less multiple offers and a couple deals getting conditions put into them now. So the balance of power is starting to balance out. It's not really showing it on the numbers here, but you could just see that if there's just a little bit of influx in inventory, the buyers are going to be in a little bit of a better position to negotiate, or at least get some due diligence clauses put in there and whatnot. So it's definitely a very, very interesting time in the real estate market. I have my eyes peeled on it every day. It's pretty interesting. I hope that you find this information valuable. And obviously, if you are in a situation where you would like some advice on your specific situation, well, that's what we're all about, right? We definitely sit you down, find out everything that you're trying to accomplish, and we want to make sure we're giving you the advice that's best for your specific situation, and make sure we're building you out proper models so you can make great decisions. The way you make great decisions is by proper advice, proper planning, proper execution. All right, let's move on to the stats here. So as you can see, the listing inflow, sorry, lost my words there. The 5-year average is the gray line, the blue line's 2020, and the yellow line's the current year of 2021. As you can see, in June, we're all meeting right in the middle here. We have the same numbers as 2020. We're on our average inflow pace. As you can see, we had a skyrocketing inflow pace, and now it's going back to the average. On the home consumption side, however, we're still above average because the gray line's right here. So we're still above average consumption, and we're actually consuming more homes than we did in 2020 at this pace. And this is the one that isn't the best indicator that things are going to go in the right direction. As you can see here, when the inflow and the outflow are stacked on top of each other, we had a nice gap between the two, and actually the gap started to grow. The space between these two started to grow, which meant more inventory was coming than selling. And now we can see that the two inflow and outflows really tighten up, and I mean, we need that gap to add inventory because this doesn't account failing inventory. So if you consider that this is inflow, this is outflow, and then there's actually failing inventory here as well, it's almost zero. Like they're pretty much running together in a straight line right now, which means no new inventory is going to be added. I mean, we're just going to be continually losing inventory at this pace. And you know, we saw what happened in January when there's only 90 properties for sale. It really drove up multiple offer bids. Anyways, here we go. Days on market. It has increased by a day. List price to sale price ratio. I covered this in the last video, but why I explained this is going to be higher than it was last month. You know, how does a market drop 7%, but the average list price to sale price ratio stay at 106? The way it does that is by people bringing houses to market that don't sell. They don't get the price they want. They take it off the market, put it back on the market at a different price. A buyer brings an offer at that different price, and then sells it at that price. So therefore, they listed here, didn't sell, reduced with a brand new listing. So it looks like it failed to sell, brand new listing, and then someone actually overbid on that lower price. So even though the average sale price came down 7%, the average list price to sale price ratio was up. So that's my explanation for it. I believe it's a pretty good logical one. If you have actually a comment or a debate on it, I would love to hear your opinion. Drop a comment below and let's start chatting. All right, home is available for sale. As you can see, we're getting right back to where we were in March, about 130, 127. So we gained a little bit of inventory, lost it. Well below our 2020 numbers and well below our average. It's pretty telling. Okay, so here we go. Here is the great comparison I can do. 2017, right? Massive run up. Same situation, really low inventory. Right around here, government steps in, introduces foreign buyers tax, qualification rates on anyone with over 20% down, and introduce some cooling measures in the marketplace. Those measures start taking effect, and then we have a decrease, right? Are falling off. And just like I showed you in that Q3 report, we had a 10% quarter over quarter adjustment. And I know we can't see the months because I have too many months stacked in here, but this right here is Q3 2017. Here we just are about to start Q3 2021, so third quarter 2021, we're about to start that. And we are starting in the same direction that we started it last year with, in 2017. So that was quite a considerable drop. I mean, from 785 to 727, who knows what July will bring. It's going to be up in the air, but right now there's no inventory, so sellers are still in a bit of control. If new inventory comes onto the marketplace, though, however, that could take away that control from them. If the cooling measures continue to decrease buying appetite, that could also be a cooling, something that cools the market a bit. But hey, I'm not sure if we're going to be flat this month, down or up. If I were to predict something, I would say we're likely going to be flat this month. I don't think there's going to be a decrease. I don't think there's going to be much of an increase. Time will tell. I'm on live video right here, so you can check back and see if I was right or wrong. But again, at the end of the day, your real estate scenario really depends on your unique situation, right? So if you're buying and selling within the same market, as long as you're not leaving your dates from when you sell to when you purchase, or what you could potentially be doing, which is really bad potentially, is purchasing right now and then selling your house later, right? If you sell your house later and you wait 1 or 2 months before you actually sell that house, you can actually lose money on that deal. If the market's going up, you gain money. If the market's going down, you lose money, right? So ideally, you're planning your scenarios around what's best for you in terms of if you're moving within the market, usually you're going to be safe because you're not going to be having those big wild swings. But where it really does potentially affect you the most is if you're just straight selling and cashing out. If you're just straight selling and cashing out, average sale price keeps dropping, you're losing money every day. Average sale price keeps increasing on the buy side, you're losing money every day. So I mean, really just when you're buying and selling and not doing anything else, that's when you're going to feel the effects the most. Hey guys, appreciate you hanging out with me. My name is Steve Zahnd from the Zahnd Team Real Estate Advisors. I hope you enjoyed this live market update. And yeah, if you want to have your own market update about your specific situation, we're here for you. Check out that new website, link below, zahnteam.ca, or give us a call. Love to connect. All right, thanks everybody. Bye.